there are some really strange rules, and an example would be clothing.
Welcome to Ask the Experts, where each week we talk to people in the industry to get the inside word on what's happening right now, what that means for the tactics you should use to make the most of your money. This week I've partnered up with Xero, who's kindly lent us their expert Paul Churchman. We're talking about the myths that pop up at the end of the financial year and how to stay on the right side of the tax department. Making Sense has partnered up with Xero and even snagged you a deal. To help you supercharge your small business, join Xero with a special discount for Making Sense listeners. Visit xero.com/FrancisCook to unlock the special offer. I'll drop the link in the show notes too, so check it out. It's just a click away. Before we get into it, Making Sense is stoked to be supported by Kiwibank. We've teamed up to bring you insight directly from their people, the experts who live and breathe this stuff every day. It's not the outdated stuff that worked 5 years ago. It's what's happening right now in the industry to help you make the most of your money. This is making Kiwi better off. This is Kiwi. So hi Paul, welcome on. I've got my coffee. I'm ready to talk tax. Let's do this. End of financial year. Let's start with that actually, because what is it? Is it just the sort of one-day rubber stamp at the end of the year? Like what's going on when we say end of financial year?
It's just a day in the year that you go from all of the information having to be this year to next year. For New Zealand, it's 31 March. Other countries around the world, or generally speaking, agriculture is slightly later in the year to align with a slightly less busy time. But it's essentially you close off the books on 1 year, return how much income you made or lost to the IRD, and pay your taxes based on that. So it's just a line in the sand. It's just a day. And for us here in New Zealand, it's 31 March.
And I think a lot of people do think of it as just like the day you file your taxes, right? Is that it? Is there slightly more to it? Run us through that. And also, is there any sort of wiggle room leeway? You say there about the sort of 2 months where you've got to figure things out. How hard and fast is this deadline? How much should people panic?
There is more to it. It's not the day you file your taxes. Generally speaking, you'll have a couple of months after the 31st of March to actually calculate how much tax you should or shouldn't be paying and return your income tax return to the IRD. The hard deadline for sort of individuals to submit your tax return by is the 7th of July. So whilst our financial year-end date is 31 March in New Zealand, everyone here does have up until that point. There are things called extensions of time, and if you work with an accountant, you do have longer than that. But just as a rule of thumb, if you're an individual, you have to calculate the total amount of income and expenses you made in the year to 31 March and submit that to the IRD before the 7th of July.
Yeah. And you've actually, before you came to Xero, you've had a long history of working in this area, right?
I have been at Xero for 9 years, but prior to that, I was a chartered accountant down in Wellington, so plenty of experience in this space.
Now, I put on the old socials that we were going to talk some tax, and people send me masses of questions, and I love that. It means we can crank through them in these podcast episodes. So many people dying to know more about expenses. I think everyone would love to be able to claim some expenses back. So starters, who can claim expenses back? What is the deal with that on tax time?
Yeah, the first instance for this, and maybe preface it also, is that this is not tax advice. You should potentially talk to a current professional in that space for it. But if you're just a salaried PAYE employee, there is not many expenses, if any, that you can claim. I think the claiming of expenses is when you have something else apart from just your PAYE or your salary from your business, from the employment that you do. That's when you can claim expenses. And this is going to sound a little bit maybe nerdy.
We love nerds here.
Essentially, it says, is there a nexus with the income that you are deriving? What does that mean? Essentially, it means, are you spending the money for that expense in correlation with the actual business effort that you're trying to do to actually produce revenue or income? That's essentially what an excess is. The one thing I suppose to just reference on that is there are some really strange rules, and an example would be clothing. I cannot claim a suit, but there are some times or some instances if you have to wear steel cap boots, these are the sorts of things that you may be able to expense claim depending on the type of business it is. So yeah, high level, salaried employee, no expenses. If you're running a business, does that expense correlate to the business? Then potentially you can claim it and just chat with your advisor on that. Particularly if you're like a sole trader, one of the things that you may miss is all of the expenses that you can claim. So one of the things that you could do is, just as an example of a few, there are things like home office deductions, in certain times travel to and from the places of work. If you live in Te Awamutu and you're traveling to Auckland for work.
Shout out Te Awamutu.
Shout out Te Awamutu. That could be, you can claim mileage or other these sorts of things. So I'm not on this going to give you an exhaustive list, but it is just, if you are making income outside of PAYE, it is worthwhile having a conversation with either an accountant or doing some of your own research on the IRD. And then if you think there is going to be benefit to you claiming those expenses, it is always a good idea to chat to a professional in this space.
Yeah, absolutely endorse that approach because it's tricky, isn't it, right? I mean, I have often avoided tax conversations because there are so many little things that can change what would happen for your individual situation. So, huge disclaimer, everything we're talking here is general rules of the game, and then go and chat to a professional and say, hey, I heard this. Does that apply to me? Really important. What you mentioned there about the clothing is like such a trigger point for me because now I run my own business. Previously, I was a salary employee, but also a sole trader on the side. Quite a little hack there, because of course in the process of the things that I had to do sometimes as a sole trader, there were things I could claim back. One of the things I did as a sole trader, I do lots of speaking events. You have to show up and look a certain way. You have to look decent. Often they're very corporate gigs for the type of things I do. So I have like this amazing 3-piece bright red suit that is
a power suit. Love it.
It's such a power suit. Yeah. And it, cost a nice chunk of change. Couldn't claim it because it's not technically something that I could only wear for work. It could be worn in all sorts of situations. And moments like that would really bug me. But apparently, okay, this is what I've heard. Apparently the reason ABBA back in the day had such insane stage costumes was because they wanted to claim them back on tax. The rules over there was very similar in terms of you have to show that you couldn't use it for anything else. And so they had these insane, outrageous costumes, literally as a tax back moment. I just think that's brilliant.
Well, great for the tax system for producing us ABBA's creativity. Awesome.
Yeah. Thank you for that, giving us ABBA. What you mentioned there about the home office is a great one, really important, because I think sometimes people struggle a bit with if you've got a home office, what can you claim back, how that works. It's a percentage rule, right? How do you figure that out?
There's a couple of things that you need to consider. Do you use that space exclusively for the office, for your sole trader or for the business? And then if that is true, then you can do is what's the square foot or the square meterage of that home office as a portion of your total home? And then let's say it's 15% or something like that. Then you can say bills that are relevant, things like your internet, your power, maybe rent or interest. Some of these things you will be able to claim a percentage based on the square meterage of the office within your home as a general rule. But yeah, like you do need to check it. Is it partly used as an office, partly not? And there are sometimes more complicated situations where you use, say, your dining room table as your place that you do your work. In that instance, you won't be able to say, well, my dining room is 30% of my home, I can claim 30% of my expenses. But it is a reason to then actually have that conversation and go through the workflow of figuring out exactly how much you can claim, because it is a place that a lot of people overlook in terms of claiming that benefit at year end.
Yeah, and really worth doing. I do feel like a lot of these things it can feel a bit intimidating to work out the rules the first time around, but
Yeah,
it's often one and done. If you work out that percentage and what it can be applied to, from then on you just keep applying it. So maybe a little bit of time up front, but so worth the investment.
for sure. I would touch on that. I think that's a general positive principle to take across more broadly, getting prepared for tax time. Uh, uh, you know, a lot of people are apprehensive and afraid that it's a date that stresses people out. But the counter to that is if you've done a little bit of work throughout the course of the year, it's not that stressful. So what I mean by that is maybe you have a rental property, maybe you don't have a separate bank account for it. Some guidance, some accountants might tell you it is always good to keep business and personal separated for tracking purposes. Maybe you haven't kept copies of your rates, insurance, interest, or any other things in a specific manner. And then when you get to the year end, it's going to be stressful because you're like, I don't know where all of this is. I don't actually know what my tax liability is. I don't know how I can best, go into this new financial year. So the principle of, that first time, and it's a little bit like ripping the Band-Aid off, it's going to help you. So at this time of year, yes, we're preparing for the end of 31 March, but potentially we could also be preparing for 31 March next year. What are you going to be putting in place so that you're not as stressed and feeling like this level of anxiety right now that you currently are? So if my guidance was anyone out there that's feeling anxious about the end of year, I would encourage you to think around what tools. Yes, I work for Xero. Xero is a great tool that can help with HubDoc or taking photos, but maybe even it's just an Excel spreadsheet that you can be documenting whenever you do some expenditure, so that when it comes time for year end, you're not, what do I do? Where do I go? Where is my information? It is, hey, what I have done over the course of the year is either take photos, they sit in this folder through HubDoc or other, and you know that tax isn't your strongest suit, and that's why we have professionals for it. But you've got all of the source documentation, all of the evidence for all the things that you've done, so that you can just send to them, and then they can handle it for you. Or if you're one of the real DIY people, then it's read a lot on the IRD's website and understand what it is that you can actually claim.
This is end of financial year. This is end of financial year for your business supercharged with the help of Xero accounting software. This is your business supercharged with the help of Xero and blasting past end of financial year stress once and for all. Try Xero free for 30 days. Terms apply.
Life is full of ups and downs, so no matter what your everyday looks like, Kiwibank has the products and services to help you manage your money your way. To find out more, head to kiwibank.co.nz. This is making Kiwi better off. This is Kiwibank.
Now, Francis, I think you mentioned that, or in passing before, that some of your listeners would be interested in learning a little bit more around entertainment, as that's one of the most...
It's a blurry line, entertainment, right?
It is a blurry line. It is a very blurry line. So I thought, I was going down a rant on how to get prepared for next year, maybe I could just touch on a couple of principles.
Do it. How much can we get boozed and claim it back on tax?
Well, it's that fine line. Depending on what you're getting boozed for, depends how boozed you can get. But as a general principle, entertainment is either 50% deductible or 100% deductible, as long as it correlates, again, back to that nexus of driving the income or outcomes within your business. So, Francis, if you and I go out for a long lunch on the viaduct next time you're in Auckland,
I'm down.
and then we have a bottle of wine, that, in that instance, is going to be 50% deductible, as an example.
What makes that 50%?
There are a couple of things, and the best guidance that I can give to people listening to this podcast is to jump on the IRD's website, as they have a pretty exhaustive list.
Nice.
I might just give a few high levels. Some of the principles are entertainment at a sports or cultural events. Here's a funny one. Hiring a boat or providing food or drink to people on it, 50%. And food or drinks you provide in social events. So I would sort of determine you and I having a long lunch and a bottle of wine. It is business related, but only 50% would be deducted in that instance. When like the other part about entertainment is what is entertainment versus just providing food through the courses of, say, conferences or other things. These are the little parts where it is a little bit grey. And so overarching, it is if you are spending money on business purposes and maybe taking a client out to a sports game or anything else, oftentimes that might be deductible. So make sure you're chatting with your accountant on that. If you and your friend are going to the pub on a Friday night and they're not a client, they're not a prospective client or anything like that, it is unlikely that will be entertainment and deductible. That's more a personal expense. But for that, again, have your records and have your conversation with your tax professional to make sure that you are capturing as much of the expenses as you are allowed to.
Yeah, because there are times, right, where it is genuine business purpose to be going out, socializing, talking to people. As I say, I've spoken at events before where a lot of it is networking, but it's genuine business for the people who are there. So it's a tricky one. And I think one that you have to, as you say, keep your records, be ready to show how that's linked to making money for your business. You often can, just, be ready.
Sure.
Because I'm sure it's probably one where a lot of people do try to push the boat out a little bit. So I imagine the IRD keeps a little bit of an eye on it.
Yeah, well, I mean, I don't know about how much they're looking into it. It's when I was an accountant 9 years ago, that's definitely something we would be mindful of. But if you are doing things that are not aligned with you earning your business income, there is the chance that that they will find it through audits and others, and oftentimes your accountant will tell you can't claim that. When I was an accountant, there were a couple of customers that would try and put things through entertainment, and I'd say that's not a business expense. Put it on your personal card. Well, you'd ask the question first: did you entertain a client, or is that just you buying yourself a pint down at the pub? And if it was, I was like, no, that is not business related. You may tell me it's stress relief, but that's not business related, unfortunately.
As a loving friend, I have to tell you, no.
Correct.
If there is a mistake made, who ends up being liable? Because I have seen some people plan to throw their accountant under the bus, which A, bit mean, B, I don't know if that works, does it?
It's an interesting one. At a broad level, again, not general advice. If it is a genuine mistake, the IRD can be slightly more lenient versus if it's intentional deception. So that's a very, very, very big difference. But if you try and you make a mistake in what you submit to the accountant and they don't ask the question, it could potentially come back to the small business owner. But when it is a genuine mistake, the penalties and interest that the IRD charge are less than if it's intentional, as I suppose the guidance. But if there is any doubt, ask your tax accountant, as it's best not to make mistakes. And, they do this as their day job. So if you have any doubt, ask them the question, and they'll be able to give you the guidance on whether or not something is or isn't claimable.
Yeah. And I think it's better to err on the side of caution, because I, for one, do not like to mess with the tax department. They scare me.
Yes.
Now, this one was a comment on a recent post I made. So I want to put it to you, and we'll just talk about it directly, because why not? They said that accounting software can be too complicated, and they think sometimes it's too expensive for small business. So what do you make of that? Do you have a response to that argument?
It's an interesting one, because I've set many, many, many people like myself on accounting software, Xero and other, including family members. I taught my mum how to use Xero. I think it took me 4 years of working at Xero before she convinced to move on to the platform. And
Mum wasn't sure.
she wasn't sure. And the reality is, for her, It did take a little bit of learning, but it's not impossible. And it comes back to that thing we talked around earlier on this podcast is how are you setting yourself up for success in the first instance? The biggest step with accounting software is getting started, and that's when you need the most help. So ask for it. Trying just to try it yourself, you can, but to get things started on the right foot, it is best to work with your accountant. They will teach you exactly what you need to know and what you need to be doing. And that little bit of guidance, it's just like riding a bike. You're going to be off laughing and happier and less anxious than you were in the past of not knowing where you currently sit and what the outcomes are going to be. Xero also has plenty of courses that you can take online, but there's nothing like just chatting with your trusted advisor to say, I'm thinking about this, that, is this the right move? Now, regarding cost is relative for everyone. I think the cheapest available subscription on the Xero.com website is $35 a month. It can just save an immense amount of time. I think the people don't necessarily always do in New Zealand, and this is shown in some of our productivity stats, it's like, do we value our own time? How much time are you spending around the kitchen table trolling through those paper receipts? There's stress, anxiety that comes with that, but it also takes a huge amount of time. For that $35 a month price point, could you be doing something better with that time in your evenings? With your kids, doing something passion of yours outside of work, or more working on the business to make it more profitable? I think there is definitely ways to reprioritize your own time to get more efficient, and leveraging accounting software is one of those things. So I think that's my take on, is it complex and is it expensive? Get the setup right, and do you value your own time, which is a thing in New Zealand that we're not always so good at.
Yeah, actually, that has sparked a memory in me of a previous episode. It might have even been the previous episode with your colleague Bridget about the productivity problem in New Zealand. It's a chronic one, where we don't. We work a lot of hours and we don't get as much back from that as we should. And I was talking to her. Yeah, the more I think about it, the more I'm sure this was a conversation with Bridget. Go back if you're interested in listening to it, and look for the Ask the Experts episode about small business hacks, because she was brilliant. And she was saying about, we just have to get better at using our time smartly, because we're not earning enough for the time that we spend. And this is one of those things. And I'm constantly trying to figure this out now, running my own business, where my initial instinct is to DIY everything. But then also I'm not an expert at everything. I am really, really good at some tasks, and then others, I should outsource them to people who will do it really well. And okay, it costs me some money there, but A, they're going to do a better job of it than I would. So actually, sometimes it ends up saving me money. B, I can then spend my time doing the things I do really well for a premium instead of trying to hack together these various solutions. So I just think we do have to be smart about how we use our time, don't we?
100%. A quick little rule or guideline I like to say to people is, if you are a sole trader or you're charging out for your time, what is the charge out rate that you use? Now multiply that by the amount of hours that you're currently spending trying to stay on top of your books. There is a better way to do it, and that could look like using Xero's accounting software and working with that tax professional who's trained to do exactly this, and will oftentimes also get you a better outcome.
Thanks so much. That's Paul Churchman from Xero giving us the inside word on the end of financial year myths, everything you need to know to keep your taxes in order. But if you have more questions on this, honestly, there was heaps more I was planning to send his way. We just ran out of time. So if you have more questions on this, anything else to do with money, end of financial year, send them through. We can always bring them back and we'll answer them for you in a future episode. You can find me on Facebook, Instagram and TikTok as Frances Cook NZ. Send those questions through there and also find a lot more money content for you. Don't forget to subscribe to Making Sense so you get even more tips and tricks with your money. Until next time, have a great day. Just a note before you go. This podcast can only give you general information about how things work in most cases. It's not individual financial advice. We're all different, so some of this might not apply to your specific situation. Take what works for you, ignore the rest. If you're after individual financial advice, a financial advisor is always the best bet.